Okay, well, Bitcoin's path to 100,000 is hitting a speed bump here, on track to snap a 4-week winning streak. But our next guest still sees the cryptocurrency climbing to the 250,000 mark. Yes, 250,000 by the end of next year, and to 500,000 by the end of 2027. Joining me now is Frank Speiser, the CEO of Metafide, which is a predictive trading platform. That sets off, Frank, all kinds of bells and whistles around here. Predictive models for cryptocurrency. What exactly do the models do, and what are they showing you about the price of cryptocurrency?
Yes. So what actually we do is we take human input and combine it with raw AI models to make near-term asset price predictions. The further outlooking stuff is just models of supply and constraint, what it could be. So our primary focus is to arbitrage markets by combining human subjectivity and intuition with a bunch of various AI models.
Okay, so if it's a combination of the two, and those model inputs go into an eventual output, what exactly are the inputs that are showing you that there could be near-term, at least moves, possibly to the upside for that cryptocurrency market, especially for Bitcoin?
Well, on the Bitcoin side, you have large buys. The ETF inflows are at record highs. You have an announcement and an intention by the incoming administration to assemble a Bitcoin strategic reserve. So you have to assume that the United States isn't going to just have that by itself. So other countries are going to have to adapt and make moves. So that hasn't quite shown up in the market yet, but the ETFs are growing, the institutional input's growing, and now finally you're starting to see some smaller trades show up on the market, which indicates there is retail interest and it is coming back. That hasn't been present for the previous few months. Most of the previous run-ups have been driven by retail. However, this one has been led by institutions, and now you're going to see retail pushing up over the top.
Mark, a lot of technical analysts, chart watchers tend to look at things like volumes as a way to kind of either confirm or put input into maybe the direction of some asset prices. How exactly do trading volumes look to you, and how do they factor into your models for prices for things like Bitcoin?
This cycle, the volumes don't correspond with previous trading volumes because you have these large institutional buyers in the market that are essentially disrupting previous models. And so what you have to do is you have to take a very near-term view and just look at, given the current conditions, the current supply that's out there, and how fast it gets removed from the trading pools, what that's going to look like. And what it does look like is there's not enough Bitcoin out there to satisfy demand right now. You're having people move into the market. As soon as trades show up, they're getting taken. And then the floor that Bitcoin can drop to, normally the downside of trades look really steep. But you have these people with an appetite that will come into the market, and you're seeing funds snap up, discounts because they know that the asset's eventually going to rebound and push higher.